Good afternoon. This is Brad Dennis with BIS Commodities with your week in review for the first week of July 2016. Interesting week with corn and bean prices much lower. Looks like livestock, cattle mostly, it's been trading in its range. Possible breakout in hogs. And then over in the macro section, we're seeing stocks trade up to the highest levels we've seen this year. So let's start out with corn and beans. Corn and beans in the midst of a weather market still. Corn opens up on Tuesday, gaps lower due to the amount of moisture that we saw over the weekend. Good moisture again this week. Not very threatening in the near term in the 1 to 5 day. So corn gaps lower. We trade down to about the 46 level in December corn. On Wednesday or Thursday, we hear that CONAB has greatly reduced the safrinha crop. So the safrinha crop, or its summer crop, is about 275 million bushels less than first anticipated. With that, we did see corn rally back up. The problem was the funds were still in liquidation mode. And as they continued to liquidate, we went back down and tested that 46 area. So now we've got a trading range in December corn, 46 the low, and then the high about 63. Still a little gap there between 63 and that 65 and a quarter, which was last week's close. This opens up for Sunday night. We get threatening weather. I bet you we gap higher, and all of a sudden you've got an island bottom, and we'll put some higher prices on this corn market. You have less threatening weather, it's going to become even more and more resistant. Now, also keep in mind that next Tuesday we're going to be looking at a supply and demand report out of the government. In that supply and demand report, we're going to include the 94.1 million acres that we saw at the planting intentions off of our quarterly stocks report. We're going to include an extra 200 million bushels because that's what we found in our quarterly stocks report. And we're probably going to have above trend line yields right now because of the 75% good to excellent rating that we're seeing so far from the government. So we have the potential to go from a 2 billion carryout last month to a 2.3, 2.4 billion carryout this month. That would trump the weather to a certain extent, I believe. I think we trade the numbers on Tuesday and then all of a sudden weather takes over. In the beans, same kind of scenario where took them down on Tuesday. They were down 81 cents at one time this week. We bounced back about 35 cents today, so still 45, 50 cents lower on the week. Interesting to note that we've taken this thing down, tested our May 24th low of that 1020 area, bounced off of it. Probably too early to take out that level until we really know what weather's going to be like in August. If it's good weather, then that probably will be tested. Until then, I'm looking at a 1020, 1080 range on November beans. Now, the other side of the beans is after that $1.50 sell-off in beans, we haven't seen any action about old crop beans, a little bit in new crop, but people have been very quiet with purchases right now. So that's enabling that price to not really bounce all the way back after a down day, I would assume. So once again, too, we've got a weather situation that could be in the makings down the road. It's just we have less confidence in the maps that far out. So we have to wait until Sunday night and see if Sunday night agrees with what we're seeing today and to what extent. You look at NOAA's website and you look at above normal temps and above normal rainfall. So the people that are looking at that are looking at something a little bit different than what the privates are looking at. So until we get those two in agreement, it's going to be a guessing game on the weather going forward. Livestock market. Cattle continues to trade 111 to 115, 110 to 115. We saw cash trade today, 122, 123 were offered out there at the beginning of the day, 121 traded towards the end of the day on the cash side of things. Still keeping about that $8 basis in there to futures. Packers really aren't paying up too much right now, and you're probably seeing some contract cattle brought in. On the hog side of things, we've seen a lot of reduction in open interest on hogs. Hogs open interest was down 13,000 this week. And right now we're looking at the front end of hogs testing that 200-day moving average. Should we close under that for a couple days, all of a sudden you've got some real liquidation pressure, I think, on that hog market. So kind of keep that in mind and see if that level can hold up there. In the outsides of the macros, we're seeing energies off a bit. Energies are kind of a reflection of what we saw on the inventory report this week. People had anticipated after the API data on Wednesday that inventories were going to be down over 6 million barrels. When it came in the next morning, the EIA data, which is more accurate, it was only down 2.5. They had overdone it to the upside, so they brought it back down. Plus, they're finding out that up around that $50 area, we're not reducing our production levels all that much. So we're trying to find the bottom here. We've taken out some support levels. We'll see if those support levels are now on the resistance side for the crude oil market. Dollar index is up about 50 cents. After we've made it through the Brexit and everything, and we're trying to see if that dollar can hold its own. And today, kind of interesting, I would have assumed that the dollar would have been a little bit higher after the large non-farm payroll number that we saw. Non-farm payrolls came out, the estimate was 180,000, came out at 287,000 with a 4.9 unemployment rate. That unemployment rate went up because we're seeing more participation too, so that's a good thing. It seems to me that you're starting to see, if the Fed was worried about last month's unemployment or non-farm payroll data, they shouldn't be worried about it now. So moving on, these better numbers are going to bring that rate hike back on the table possibly, and if that comes on the table, that usually supports the dollar a little bit. But also, we're seeing a risk on trade going into the weekend too, with the higher index or equities market. So you've got a few trade ideas that are kind of going against each other. We'll have to see how it all pans out. Stock market up at its yearly high after today's large non-farm payroll number. So that's going to bring some good feelings to this market and should, I think, help the energies down the road a little bit. So that kind of sums up things. Next week, what we want to look at is Tuesday, we're going to get that trade data, our monthly supply and demand report. We're going to see what they think about this year's corn and bean crop. And then after that, we're going to look and see what the maps say at 11 o'clock. Well, I guess the number comes out at 11 o'clock, but then we're going to see what how the maps are looking, and that's going to be the driver for the rest of the week. So keep an eye on that stuff, and this is the Week in Review from BIS Commodities. Broadcast over.